Republic First has had a number of challenges that has been going on for more than a year. So it was really not a sudden event such as a rise in interest rate. There was a long history of kind of management failures that really led to this point. However, a big piece of it is that it's a much smaller bank, right? They had maybe 6 billion in assets compared to 100 or 200 billion of assets in banks from March of last year. I think that this is much more of a one-off failure. I do not think it's a sign of crisis in the banking sector. Banks are under pressure because it appears that we're going to have higher for longer interest rates, and profitability is challenged, but that's very different from insolvency. So this really is a one-off bank failure that was well telegraphed in the marketplace. This was not a surprise to anyone. There were a number of recapitalization plans that were tried, and there were many. It was a long road to get to this point, and many people were really not surprised. Well, while the banking sector is under pressure and profits are under pressure, it does not mean that there is widespread problems or widespread liquidity issues in the banking sector. It's still relatively healthy from a liquidity perspective. That said, you always have to pay attention to the fundamentals of a company. Good management, good quality is very important, and I think this is a great example where management really did not deliver in terms of executing. It wasn't interest rate. I mean, interest rates, risk management may have been a piece of what kind of put them over the edge, but there was a long series of failures that really brought them to this point. So, paying attention to the fundamentals, paying attention to management quality is always important, regardless of what sector you're in. I think bank consolidation is something that we're going to be seeing for some time. The U.S. is probably, you could argue, the U.S. is overbanked. There are many, many small regional banks, but they provide a service that the big banks don't provide, which is that there is a teller that someone can go and talk to. So, they're a little bit unique. They really do not compete with the big banks in that sense. However, in terms of acquisition, particularly in this case, a bank of Republic First size just really doesn't move the needle for like a mega bank to come in and acquire them. And that's why you see that oftentimes it'll be another regional player that already has branches in that area or already covers that area and is looking to expand and yet remain below kind of the $50 billion threshold, which is where you get kind of increased regulation. So, I think this one was just too small for any of the big banks to really be interested.